morning, ladies and gentlemen. Welcome to the presentation of the half-year results of the Eurazeo Group. I will now give the floor to Madame Virginie Morgan and Mr. Philippe Audouin. Thank you very much. Good morning, everyone. Thank you for being here this morning for the presentation of the half-year results of the Eurazeo Group. I'm with Philippe Audouin, the CFO, in order to give comments on these results. The first half of 2020 reflects the strength and relevance of the Eurazeo strategy. Our group has fully played its role of stabilizer and accelerator in order to stabilize, first of all, our share price in a highly volatile market environment, stabilizing our resources in order to face the crisis, and also to stabilize our portfolio companies by providing human, operational, and financial support on a daily basis, and also to step up the digital pivot in our companies to accelerate the recovery in the companies hosting the general public since the end of lockdown in Europe, accelerating the growth of companies which had growth and expansion, external growth projects such as creches and hotels, and finally to step up the recovery of our fundraising activities. This is the message that we wish to convey this morning. Our group has been responsive and dynamic in order to limit the impact at the height of the crisis. You can see here the reflection of the stabilizing power of the diversified model of Eurazeo. Assets under management are stable, our revalued net active is resilient and prudent. The excellent results of fundraising in an uncertain market environment over the past 6 months also bear out the momentum of our fund management activity. This model fully exploits the diversification that we have implemented in recent years through the stability of the value of Eurazeo Patrimoine, Eurazeo Brands, Eurazeo Development, and all of our management activity since the 31st of December 2019, a greater impact for Eurazeo Capital and PME, but whose assets, for the most part, apart from those with exposure to travel and tourism, are performing well. Strong momentum for Eurazeo Growth at plus 11%, reflecting the relevance of our investment strategy in tech companies. Diversification has enabled us to contain the impact of the crisis on our portfolio. This is also a model which has reduced our risk exposure. 90% of our revalued net asset is stable at 30th of June and picking up in the second half in value terms. 65 million euros only have been reinvested in order to contribute liquidity and guarantees to 4 of our companies. We thus have a model which exploits synergies between investment in shareholder equity and the asset management business, which is up strongly by 18% in the first half. Here are the foundations of the model. Private equity identity, 71% of assets under management, the majority of which on the balance sheet of Eurazeo are now directly invested in high added value businesses, generating a yield and management fees to the tune of 2%. Foreseeable income, 2/3 of the assets of the Eurazeo Group are now managed on behalf of investor partners with the assurance of recurring revenue over the long term, an integrated platform where each of our divisions benefits from the financial and human resources of the group. In this very uncertain period, this model is a differentiating asset, providing protection for shareholders who have seen during the crisis the major benefit of investing in a group where no asset represents more than 10% of our revalued net asset. Synergies and the expertise for entrepreneurs and business leaders who benefit from the contribution of this ecosystem representing 430 companies. Significant international growth potential for each of our companies through a business network present across 3 continents and dozens of countries. diversified model with reduced risk and increasingly foreseeable. This greater visibility, this is the result of the sustained growth of our management activity for third parties. In an uncertain world, we can depend on the firm commitment over a 6 to 10 year horizon on the part of our partners. We have a high level of average fees at 1.4% through our high private equity content with strong value added. Recurring management fees are up by almost 25% over the past 4 years and up 18% on the first half of this year. Adequate financing for our group companies, a stabilizer at group level and a stabilizer also in terms of our portfolio companies, first and foremost regarding liquidity. The great majority of our portfolio companies went into lockdown with adequate resources. This reflects an acquisition policy that has remained prudent in terms of leverage, which by end of 2019 were well below average LBO levels for European and American companies. The result is that we have a limited number of companies, and the amount of the degree of assistance we will have to contribute should be around 2% of net asset value by the end of the year. A few words now on WorldStrides, which is one of the world leaders in student travel and has been severely impacted by the impact on tourism. First of all, we have sought to preserve the brand equity of the company by ensuring repatriation of students and by reimbursing as best as we could the families, conducting a conciliation procedure which has led to the limited reinvestment of $50 million for Eurazeo. We have fully played our role as an active, responsible, long-term investor based on the conviction that the company will come through this period and that with our support it will be one of the rare companies in its sector to be able to bear out its future value, potential value creation through accelerated external growth. The best illustration of our external growth with average leverage levels which have been below that of the European sector. Eurazeo invests in healthy companies which have strong profitability records. This is managed by an experienced team and accounts for the very low historical default level of this business, which of course is a differentiating asset against the backdrop of recovery. During our crisis, our private debt portfolio did not have any difficulties in terms of liquidity. Going beyond financial support, we also have day-to-day support with the proximity of our teams in order to help these companies come through this crisis. Internal support on HR, funding issues, cyber security, and much broader support through the establishment of a shared digital platform in order to share best practices and the know-how. This platform has been extremely useful for some of our companies after the lockdown period. The last pillar is our ESG leadership. I am convinced that our experience and the results we've achieved for over 15 years have also protected us, since this has enabled rapid decision making concerted across the whole of the portfolio with best standard governance, responsible support provided for companies in order to deal with the social consequences of the crisis, and constant attention on supply chain and subcontracting. ESG is a major lever for major driver for value creation in a growth period, and I will come back to this in concluding. This has also been one of the key responses key responses to the period of turbulence that we have gone through. I will now hand over to Philippe Audouin, who will provide more detailed comments on the financial results of the first half, and I will conclude, of course, with the outlook for the months ahead. Thank you very much. I will now present the activities in the first half. Our asset management activity has demonstrated its resilience. Our third-party asset management is up 4%, close to the strong results of the first half of 2019. Management fees are up by 18%. Net asset value per share came out at 70.7 euros, with down 12%. Our portfolio accounts is overall stable for the first half. The leisure and travel category was more impacted. We have established this. We have been stringent in the method in terms of the analysis of the prospects for the companies, and I'm convinced that we have a prudent approach. And finally, the net income group share comes out at minus 390 million, 80% of which is due to the impact of the crisis on the travel sector, in particular the impact on World Strides. And we have a financial structure which is extremely robust. In order to better analyze our portfolio, we communicated in the first half the breakdown of our assets based on 4 categories, depending on the impact of lockdown on their business and on the revalued net asset. The first category includes resilient companies which generate recurring impact and which have limited exposure to the consequences of the pandemic. This includes defensive companies such as healthcare, technology, and the most part of the third-party asset management represents the rest of this first category. The second category includes companies which have only been indirectly impacted by the consequences of the lockdown. The third category involves companies that had the direct impact of lockdown, in particular the consumer sector or receiving the public, and for which we expect a quick recovery. And the last category involves companies directly whose business is exposed to travel and leisure, which were severely impacted by the pandemic, and for which recovery is expected to be more gradual. As you can see on the screen, you see the monthly variation per category. The resilience of category 1 is borne out as expected, without taking into account the figures for Eurazeo Gross, which recorded growth of over 60%, which are not included in these figures because they're not consolidated. Category 2 is being resilient. Category 3 was more impacted in March, April because of lockdown, but these categories have seen their business recover from May onwards, and in particular since June. These 3 categories, which represent over 90% of our revalued net asset, re-established their pre-crisis level of business. And category 4 is the most impacted, since it involves leisure and travel and represents very different situations depending on the assets. World Strides, Virginie has referred to this, and the recovery plan is pending approval from the American authorities, and this will enable it to benefit from the recovery at the end of the crisis. And Planet has been significantly impacted, and its healthy cash situation has enabled it to exploit acquisition opportunities. I will go back to this. And hospitality has been impacted by the lockdown, but we're seeing positive signs of recovery with an occupancy rate that is back above 50% for over 80% of the hotels that have reopened. And finally, Europcar published its financial statements yesterday, and I will not dwell on that. This resilience of the portfolio is also reflected in EBITDA. The companies in the first three categories have seen their EBITDA grow by 5% in the first half of this year. Let us now move on to the income statement. There were few disposals in the first half. Revenue has been mainly due to Eurazeo growth companies, which have recovered strongly in the first half. High depreciation levels, mainly impacted by WorldStride, as you can see on the screen, do not have an impact on net. OPEX is down due to the strong savings policies. Our asset management activity has continued to grow. Management fees are up by 18% due to the build-ups that have been achieved since 2019. Costs are under control, and recruitments have been made in 2019 in order to support our businesses, and fee-related earnings are up by 56% and are enjoying the strong base effect on the first half. Overall, our net income for the first half is minus 390 million, which is mainly due to value adjustments that have been booked on a limited number of assets in the first half. In the current period, we have a strong financial position, which is particularly important in this particular situation. Gross cash position is 587 million, of which 400 million from a syndicated loan, and a revolving credit facility of 1.5 million that we have extended for 5 years and potentially 7 years with the 2 extension options. Dry powder, in other words, commitments that have not been drawn down by our investment partners, stand at 4 million. So we have a 5.7 billion euros of financial resources that are available to take us through the crisis and exploit opportunities. Overall,
our assets under management are almost stable at 18.7 billion, and this is particularly 18.5% billion. This is due to fundraising and management for third parties, up 4% over the half year, amounting to 1.1 billion euros. Now, over the last 6 months, we haven't sat on our hands. We have had some raised some cash for somewhere around 400 million euros. We invested 18 million euros to support our portfolio companies, plus support to WorldStride worth 50 million. As Virginie was telling you, support to our companies should only account to some 2% of our NAV, given the ability of our companies to manage and weather the crisis. We invested some 8 million euros in our general partners, acquiring 10% extra, and our shareholdings has increased in global partners. After closing, we announced a number of investments. Machine, Eurazeo Growth, in Eurazeo PME. Other statements and other announcements may be made in the future. The Eurazeo China Acceleration Fund made its first investments at the end of July, investing in Dole, which should therefore boost its business in China, thanks to our partnership with CIC. Now, together with the direct investments I've mentioned, we have also seized to build up opportunities for our companies, 15 build up over H1. 2 examples, Planet which is really in the very big in this business, has invested in 3C, which manages online and offline payments and therefore supplements the Planet product offering. I'm sure you're familiar with Shift4, which was IPO'd recently and which was noted. Then, Red & Solar, it is building on its business through organic capacity, through calls for tenders in France, but there's also dynamic growth in Latin America, amongst other places. This has meant that the group has been to shore up its financial performance over H1. Briefly, NAV. All in all, our asset value is stable over categories 1 to 3, which again is almost 90% of our net asset value. In fact, this is up 5% over the last half year. And paradoxically, market assets have gone up, and we haven't actually factored all this into our evaluation. 11% increase in Eurazeo growth, which accounts for 7% of our NAV, results from the recent fundraising. And Nasdaq, for instance, has been up 14% year to date. The drop in NAV is in fact mainly due to category 4 that now only accounts for 10% of our NAV, which has gone down 56% in value. Volstride has been completely depreciated, and Planet has been brought down as a prudential measure. NAV per share is 70.7 euros, so 36% drop, something that we haven't experienced over the last 10 years, even though Eurazeo has become more diversified, resilient, and less volatile, and enjoys more recurring income thanks to asset management for third parties. Virginie. Yes, thank you, Philippe. So stabilizing at the heart of the crisis and accelerating the recovery. This is even more swift in that we rely on basic companies for the recovery. This is obviously particularly due to technological companies, which now account for a quarter of our business. They now account, these technological companies do account for a quarter of our assets, AUM or NAV. You have pure tech companies in venture and growth, and also Eurazeo Capital and Eurazeo SME, which are 100% digital, such as Planet, Elemica, and Trader in the US, and also EasyVista within Eurazeo SME. Over the last few years, Eurazeo Group has built one of the handsomest track record across Europe in digital investment. 4 billion euros invested in tech over 20 years, 17 IPOs in the US, including Farfetch, one of the largest European venture funds with 20 years of experience, as position as a great backer of French tech with 27 next 40 companies financed and supported by Eurazeo. And 2 investments have indeed been announced this year in Eurazeo Growth and Venture. I'm convinced that we are at a turning point, a key point. The number of unicorns has increased 8-fold over the last 5 years, and there's therefore greater need for support and has been over the last 2 years. The need to inject European capital alongside American investors. There are great tech entrepreneurs in Europe, and there must be great European tech investors. And our experience, our track record in this field means that Eurazeo is the better place to speed up this trend and become the European leader in tech investment. The best way to explain this and show this is looking at Eurazeo Growth. portfolio. It has increased on average 11% over 6 months, and there have been boosts in Doctolib or Mano Mano, for instance, who have outperformed their initial ambitions. Now, over and beyond this, the business in Eurazeo Growth are doing well, or very well indeed. They have good equity. They are active on the markets not significantly affected by the crisis. They have raised more cash recently. And as from the beginning of the year, Eurazeo has invested or reinvested 200 million euros in these digital companies. These prospects for value creation are good, and we are very confident for the next few months. Can I also mention the way in which the economy has been undergone a faster digitalization, as you can see with Eurazeo Capital and Eurazeo SME. B2C has seen digitalization during lockdown, and that has boosted transformation in such a way that it has in fact offset the direct impact of the crisis, the close down of brick-and-mortar retail business in Europe or in the US. Now, this is no surprise. Everything that Eurazeo started before the pandemic has in fact been very positive. Look, for instance, at digitalization for B2C. For instance, Nest and Bandia, for instance, have increased 2- or 3-fold their online sales during lockdown. L'In Vosges, as I was saying this morning on BFM, has moved from a catalogue to e-commerce, increasing its share of e-commerce from 25% to 40% today in its sales mix. So imagine how talented the digital transformation teams have been. Over the course of 3 months, we have been able to do more than we would have expected to do over a few years. Then there's process optimization and digitization B2B. Look, for instance, at health. If you can replace, for instance, the existing practice, look at what is done at Dork and Peter Surgical. They have completely overhauled their communications practices vis-à-vis their customers. Other companies have completely disrupted their sector through their digital practices, for instance, digital natives. For instance, Doctolib, over a few weeks, has been able to reach its multi-year targets. This means, as I have said, that we have been to do over a few months what we expected to do over a few years, and that will require massive investment, but Eurazeo will be ahead of the game. So, digital transformation, but also business transformation. I'm convinced that civil society must play a role in reconfiguring the current environment and world. Private equity will be at the forefront of this. First of all, because we represent something like 5 or 10% of the GDP in Europe and the US. If we indeed also it increases the growth of the companies and therefore create jobs. In this context, Eurazeo has been a leader amongst its peers on ESG, on governance, inclusion, environmental sobriety, which I mentioned earlier. And we will boost this over the next few years. We are even more convinced that this must be done at the heart of this crisis, which is why I'm delighted to announce that Eurazeo Group is committing itself to zero net carbon emission in 20 years across the group. We will set clear pathways. We are also announcing, or will announce in September, greater governance commitments, more parity, more gender equality, more inclusion. These are the sort of targets and goals that people would think might take a backseat during the period, we feel the opposite is true. So a reliable basis, a strong potential for long growth. That is why we have been able to raise funds with third-party investors. Compare that to last year, 1.1 billion raised in H1 this year, whereas, in fact, the limited partners has seen its market go down globally. Our dynamic is basically fed and fueled by private equity, which is actually more income generating. And this is something that's only just starting with Eurazeo growth, and we have good reason to be confident that we will reach our goals by the end of this year. We will therefore go along with this, and at least a dozen or so funds will be on the road over the next 18 months. Obviously, given the current health situation, we will have to reschedule, but we will keep this momentum for a number of reasons. First of all, we now have a 25-man strong fundraising team organized per geography in a cross-cutting approach according to asset classes, which means that we can address in the best possible way the needs of the clients and match it with the products in the company. Also, because we have a very broad investor basis from private investors and small family investors to sovereign funds and pension funds and insurance companies. Allocations in private equity across the board are still quite low, some 5 to 15%, and therefore there's a tremendous potential. And lastly, because we have great international potential. As you know, 70% of our assets managed for third parties are in fact French assets. So we have a very deep market. Out of these 13 billion managed for third parties, 70% of that is managed for French investors. So we clearly couldn't do even better on the French domestic market. But if you look at this from a dynamic point of view, 55% of the funds raised last year, 2019, were raised from international investments. So there is so there is clearly great potential still. So, as you will have understood, Eurazeo has good performance, is reliable and dynamic, and in a good position to manage the recovery. In this choppy period, our assets are actually stable. Our NAV is still resilient, is both resilient and prudent. Growth potential is still strong across the board because of our quality assets and relevant assets in the current world. This first signs of recovery can also already be felt, and partner investors are working with us, are trusting us, and we have seen that over the course of the first half year. So we have been a stabilizing factor in our shareholdings in the crisis. We are already turning towards recovery in our growth dynamic. Thank you very much for your kind attention. We'll be happy to address your questions alongside members of the management board. Thank you. Ladies and gentlemen, should you wish to ask a question, you can dial 01 on your keyboard to be added to the waiting line. But you can also write your questions on the web platform. First question from Mourad Lamidi, Exane. You have the floor, sir. Thank you. Can I ask a question relating to the way in which you compute your NAV? You had said last time that you were probably going to be a little more cautious in the way you calculate it. Can you tell us more about it, please? Thank you, Mourad, for this question. Can I first say that there's no change in the method? We have calculated our NAV according to previously established methodology. We use the usual impairment method, but you will find the specifics or slight differences under Annex 7 of the press release. So if you'll allow me, I won't go into the technical details, but do have a look at Annex 7, and if you do have any questions, we'll be delighted to answer them and address them later. Thank you. Ladies and gentlemen, if you wish to take a question, to ask a question, please dial 01 on your phone or write your questions on the web platform. I have questions coming out. First question, Geoffroy Michelet from ODO BHF. You have the floor. Hello, I hope you're doing well. You said you have 25 people working on fundraising. Can you tell us how many you had a year ago, and do you feel that you have the right kind of platform for fundraising now, or do you think you'll be further hiring on that job? Thank you, Jeffrey, for that kind of question. And yes, we are doing well. Thank you for asking. The reason why we have nowadays a strong, dedicated team working for the whole Eurazeo group on fundraising is the result, of course, of organic development. A few years ago, we only had really a couple of people working with the investment teams in capital and SMEs to support this. The 2018 Invest purchase and development within Eurazeo mean that we are working in a fully integrated way, given the talents that had been grown at Invest for a few years. And it really is the fact that we had the small Eurazeo gifted teams and the very expert teams from and well-established teams from Invest that have served as a basis, and we've added to it over the last few months. Now, you ask whether we have a strong enough team. The fact is we do intend to add to it in a very specific way to cover geographies that require coverage. I've told you about the significance of France as concerns AUM, but also the great international potential. So I think you can expect to see over the next few months a few strategic hires to cover other geographies, but I think we can say, reasonably say, that we have the right kind of a tool to manage the further upcoming situation, if that's clear. Yes, very clear, thank you.
Next question is from Pierre Bosset, HSBC. Over to you, sir. Good morning, everybody. I have two questions, if I may. First, in the 430 companies where you have either debt or equity holdings, what is the amount of PGE which you called upon? That's the first question. And the second question regarding fundraising, you have showed the 10 funds which are planned for the next 18 months without going into all the detail per fund. But these fundraising campaigns are intended to raise how much from investors, and what will the contribution be to the Eurazeo balance sheet overall? Good morning, Pierre. Well, I will start off with the fundraising aspect further to the question that was posed by Geoffroy. And I will go back to one of the last slides with the fundraising program. Several comments. First of all, if you refer to the fundraising program that we presented in the past, there is in fact very little change or impact, just a few adjustments, and I think that we are now more optimistic in terms of our ability to achieve targets since the 12th of March with so little visibility, and I think we should be looking at a postponement of 6 to 9 months for fundraising. Now, investors have stated their faith in us. Some programs have been postponed by a few months, but others have actually been stepped up. So overall, I can't give you the full details on this, but I think we should have a fundraising program for the second half, which will be extremely robust, and I think it should bring significant additional resources, and I think that 2020 should reflect a strong momentum in fundraising versus 2019, even though 2019, you will recall, was a new record year for fundraising with 2.4 billion euros raised in 2019. And regarding the amount of PGE, we have 21 companies which have enjoyed an approval of their request for PGE. Just one additional point, Pierre, regarding your question on the impact on the balance sheet. Two indications here without giving you the overall picture. Eurazeo growth is, we have a goal of raising funds of 450 to 1 billion euros, which is the overall amount that we are seeking to raise. And in this Eurazeo Growth Fund, whereas hitherto, as you know, we had funded our capital growth investments on the balance sheet of Eurazeo. And if you look at our press release from this morning, Eurazeo Growth accounts for 900 million euros for the most part of the balance sheet of Eurazeo. Looking ahead to a new fundraising campaign for Eurazeo Growth, we intend to invest up to 25% in the fund. In other words, 200 to 250 million euros. That's the first indication I can give you. And perhaps a second indication regarding Eurazeo PME. Eurazeo PME 4 planned for the beginning of next year. Eurazeo PME has announced a first transaction last week. Philippe gave some information on a new transaction which may be announced in the days ahead. And Eurazeo PME will be one of the priorities, and we intend to invest up to 50% of the balance sheet of Eurazeo, 40 to 50% of Eurazeo's balance sheet across the Eurazeo PME CAP fund, and I will hand over to Olivier when the time comes to discuss the total amount of investment that he's envisaging. Thank you very much. Now, if you have a question, dial 1 on your keyboard, and you may also submit questions in writing on the web platform. We have a question from Mr. David Serban from Chevrolet. Sir, good morning. I'd like to go back to the press release on the need for supporting shareholders' equity. You're talking about 2% of the revalued net asset, approximately 100 million euros. What are the amounts that have already been invested? And second point, looking at the situation regarding Europcar, clearly there will be a need for reinvestment on the part of the main investor, the principal investor. Will this total amount of 2% take into account the needs for Europcar? Thank you, David, for that question. Now, we have invested 18 million in 2 companies in the group, and as I said, we plan to invest up to $50 million as part of the financial restructuring of WorldStride. The additional amounts on top of the 2 amounts I've just mentioned have not yet been allocated, and this is more a reserve that we are keeping should the need arise. In terms of what has already been done on Europcar, I cannot answer the question. The company has released its financial outlook. Caroline Parot, I believe, announced that she does not expect any short-term requirements in terms of cash. Eurazeo is in the process of exiting from the company when the time comes, of divesting. So Europcar, to be clear, is not included in the overall amount. Okay. And in terms of needs that have not yet been allocated, this only applies to category 4, or does this relate to other assets? No, this may concern other assets, and for category 4, in fact, I did not include the guarantee that we had given for the state-guaranteed loan for Europcar, which was outside of the scope, but we have two companies, only Eurostride, and we intend to reinvest $50 million in Eurostride, not necessarily in category 4. It might be a need to rebuild the capital base to a limited extent in a company. It might involve adjustments in working capital. There might be a need for working capital with temporary support. So this may involve different types of help, but in category 4 there are 4 types of asset. Worldstride, Europcar, Planet. Planet, Philippe referred to it, was severely impacted, less on the dynamic conversion currency activity and less on the activity on the 3C business that we bought. But the point here is that Planet was well capitalized. It was in a strong position going into the crisis with a strong cash position in the company, which means that there is no need, based on our assumptions for what will admittedly be a slow recovery over the next 12 months, there is no need to consider reinvestment. It might involve companies in category 3, and when you look at the first two investments, we invested in Next, and this was more to facilitate the company's cash management in what was a difficult period with clients paying late, revenue that was impacted, and an impact on and also the response of our B2C companies, which managed the digital pivot with great skill, and half of the physical distribution was closed down. So you can imagine the impact in terms of working capital requirements, the disruptive impact. So those are the kind of reasons that might mobilize reinvestment needs. Now, looking at Next, it's interesting because this is a company, most of whose distribution was handled through large distribution chains, and the company, of course, was severely impacted when large stores closed, in particular in the United States, but it was able, during the period, to triple its online sales, which means that it's now back on its pre-crisis track in terms of revenue. And what is very interesting is that all of this development that has been achieved as part of through online sales is an investment in the future for Next. And the other company that we helped out temporarily, Virginie was referring to two companies, is Sommet Education. We provided additional funding during the recent period.
And as concerns the price of assets, have you seen anything change significantly over the last few transactions, valuation or something else? Well, no major changes on the multiples. And as I was said, except maybe for the growth category, we've gone up 14% year to date, but we haven't seen an increase in multiples. We have tried to be fairly prudent, and we hope that the achievements and progress of these companies can be sustained so that we can capture all this. Thank you. There are no further questions put orally, but sorry, Mr. Pierre Boissy, HSBC, you have the floor. Hello, and thank you. Quick questions. I've had a quick look at Annex 7, and it's not so much a question on multiples, but on the aggregates for the P&L. Have you changed the reweighting of the last year as compared to the current year's budget? I mean, budget has obviously been disturbed by what's happening in H1 for 2020. Have you changed things about the way you treat the aggregates for P&L? Well, you know that we basically and mainly work on historical data, and obviously H1 2020 has had a significant impact, and we have not really treated data. We've only had a couple of one-offs that we have taken in, and that's mainly been related to sanitizer and mask-related costs. There were two companies in which we did reprocess the numbers so that we can have recurring EBITDA under the so-called maintainable earnings for companies that have only very briefly been affected by the pandemic and who have recovered swiftly, and for whom we felt that it wasn't reasonable or worthwhile using gross numbers for H1. Okay, so if I hear you rightly, the 70 euro NAV is basically derived from last known month. Well, as I've said, we try and be consistent in our practice, and we have applied sort of 5-year average multiples. Virginie, obviously, for category 4, we haven't been working on the basis of LTM. I mean, not entirely written off WorldStride, but still. Again, we have 4 categories of businesses: those who have done well, those who have been stable. In that case, you can have the reference numbers for the aggregates, and we go on evaluating them with consistency. But when you get to categories 3 and 4, slightly different. Category 4, we've looked at current trading, the way it's been severely impacted, and we've really gone along with full current trading for these 4 companies in category 4 without looking at forwards and next 12 months. Just look at the numbers. We have, in the press release, made clear mentions of these 4 assets. As for category 3, some of these were affected by lockdown, companies that were open to receiving public but were closed down, for instance, health-related business with surgical intervention or surgery that was postponed, etc. So we've looked at the next 12 months and expected business levels over the next recovery period. Olivier, just to say that we rely on 2 outside evaluators who lead their evaluation, Philippe says, and they lead their own evaluation process. and we take this into account. Thank you. A written question by Alexandre Gérard from CIC, who's asking the following. What was the average fee rate at last year, given we announced 4% for 2020? And do we have, second question, any guidance for management fees for 2020 full year? On the first question, in fact, there's been very little impact on the mix. So when we publish the fee rates, as we have in the past, I think you can expect or consider that this is fairly stable around 1.4. It really only changes because of the mix. And as you know, fundraising in private equity lead to fees anywhere between 1.85 and 2, whereas debt generally generates 1% fees, not just on the pledges, but on actual commitments. And as concerns the second question, we don't give guidance. I think I've been clear enough and detailed enough already on expected fundraising for 2020 when I made statements earlier and comparing it to 2019. So I wouldn't want to go any further on guidance. I'm sure you'll understand that.
Are there any other written questions? No, there are no other written questions. Question from Berenberg. They would like to know what was the revaluation for the disposal of disposal to the China Fund. Our agreement with our partners in the China Acceleration Fund are such that the disposals of our assets are done on the basis of the revalued net asset. Now, DORC, this was a recent investment. We remained at cost, and therefore we take into account a cost of carry, which is 4% per year on these assets. So this is an indication. This was a holding alongside Eurazeo, and these are the agreed terms. Question from Goldman Sachs. In real estate, what was our exposure to the different types of real estate, be it commercial, retail, or offices? Good morning. Berkorn is with us, and I will give him the floor on this question from Goldman Sachs. We do not have any exposure to retail real estate. We have limited exposure to office real estate with an asset in London, which is Euston House, and an asset in Paris, which account in terms of net asset value something to the tune of 5%, or perhaps a bit more, 15% of the value of the portfolio, and the rest is mainly invested in clinics, hotels, and represents exposure to residential programs. Are there any other questions? Any further questions? No other questions for the time being. Question from Alexandre Cavan. How can we account for the discount on revalued net asset? Our discount on RNA has gradually declined in recent years. By the end of 2019, the average discount, which was to limit the impact of volatility, was to the tune of 12%. Now we're back to 36%. I think this is probably reflecting expectation of a situation that was to be worse than what happened on the arising from the crisis. And I think this was really more by way of a market anomaly. Looking at the stock market value as opposed to revalued net asset, what I said in my introductory remarks, but I'll go back to this analysis, is that you have 1 billion of Eurazeo growth, which is growing strongly, which we prudently revalued, notwithstanding the sharp increase in indices and tech stocks. We have 1 billion in assets under management, 18% growth in the first half, over 20% over several years. Fundraising prospects are very promising, notwithstanding the challenging environment in 2020. So we have every confidence in the capacity to continue to grow our asset management, whereas the the benchmarks in terms of multiples for asset managers are up very significantly. So we are very prudent. And there are three businesses which have remained relatively stable in terms of value. Patrimoine, Renaud gave a summary of this for his main businesses, and diversification worked very well. Eurazeo Patrimoine, Eurazeo brands, which held up very well, notwithstanding retail exposure, thanks to the digital pivot I referred to, and also the investment structures that we have with systems that afford protection through preferred shares and convertibles. 200 million euros, which we have maintained at the December valuation levels, and also activities which were more severely impacted, and in particular the tourism and travel assets, which we have almost valued at zero for the most severely impacted businesses in these companies. So if you consider that we have done a complete reset on tourism and travel, we've been very prudent with a vision based on the current situation as opposed to the past or future situation, and Eurazeo Capital or Eurazeo PME minus 13%. And if you take into account all of these resets, and as an investor, you will benefit from the growth of assets that were not impacted and the recovery of assets which only account for 10% of revalued net assets, because we have revalued them very significantly based on a very prudent approach, which I think is completely normal, both in the financial statements and in terms of RNA, which means that they have significant recovery potential, because 90% of the companies which represent RNA at 30th of June this tells you just how strong recovery potential we have. And based on that analysis, which is based on each business, but it's a prudent analysis, there's no reason why the share price should be showing as big a discount, given the very prudent RNA value that we are publishing at present.
Right, I see there are no further questions. Thank you very much all for being with us this morning, and thank you for your questions. See you soon. Enjoy your summer. Thank you and goodbye. Ladies and gentlemen, the conference is now over. Thank you very much for your attending. You can now disconnect.